Hello, good morning everybody. You're with Martin Panef, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European Session Market Outlook. I will start as usual, covering what happened pretty much over the last trading session, keeping you well informed. Starting with the US markets, a little change to the downside over the last trading session after the big positive moves by the end of last week. The dollar is getting a lot of support and managed to prevail against its major rivals, as we can also confirm that from the Dixie index, which is hovering over the 87 points currently. The dollar rose to the strongest in almost 7 years against the yen. In speculation, the Federal Reserve is moving toward raising interest rates, while the Bank of Japan and European Central Bank are adding stimulus. Manufacturing and construction data is expected today, along with two FOMC members' speeches later on today. Non-manufacturing PMI for the last month is due on Wednesday, unemployment on Thursday, along with the same output for Canada. And on Friday, the unemployment rates for Canada and the United States, along with the surrounding earnings reports and the non-farm payrolls data. That's on Friday. European markets, the French CAC 40 has continued its positive movement, ended last session with another add of almost 70 points. The German DAX has added some gains as well. We might see some negative correction for both today in the shorter run, but the big picture shows a positive uptrend. Manufacturing data schedule for today: producer price index for the Eurozone for tomorrow, retail sales for Wednesday, economic growth forecast and rate decision on Thursday, along with the minutes and the press conference, which will also follow. That's on Thursday. Then unemployment rate for the Swiss, along with retail sales and foreign currency reserves, and also industrial outputs and imports and exports and trade balance for Germany and France on Friday. For the pound, the worsening macroeconomic outputs are slowing down, and the sterling is losing its momentum. In fact, the forecast for the end of this year is pressuring the pound for continuing down pressure. The biggest day on the fundamental front for the pound sterling will be this Wednesday, when the industrial and manufacturing production outlook will come, and a few hours later the interest rate decision, as well as the Bank of England asset purchases program will also be confirmed on Friday. GDP quarterly estimate is on the agenda. Asian markets, the Nikkei 225 has added substantial gains on Friday with almost 130 pips move, and we might see a correction to that today. The dollar jumped to almost 7 years high versus the yen. Oil fell and bonds rose as slowing Chinese manufacturing growth and the Bank of Japan's unexpected stimulus highlighted diverging growth outlooks for the US, Asia, and Europe. The ruble fell and natural gas futures gained as well, 11 cents today. Pretty decent move. The dollar gouge is heading for a level last seen in June 2020 after the US consumer confidence and manufacturing reports by the end of the last month, October 31. Underscored the strength of the world's biggest economy relative to the outlooks in Europe and Asia. Unofficial gouge for Chinese factory output unexpectedly dropped in October. Data at the weekend showed, while the private gouge today was unchanged from September. Japan's markets are closed for a holiday after the country's central bank surprised investors by increasing its unprecedented monetary easing program. China is opening its 26.31 trillion yuan, which is 4.3 trillion US dollars interbank bond market to non-financial firms after tightening trading rules following a crackdown on illegal transactions. The Japanese markets are off today, as we say, Culture Day, bank holiday. Mr. Karuda will deliver his speech on Wednesday, and the monetary policy meeting minutes are also due to be published as well. On Thursday, we will see the services PMI and a couple of economic indicators, such as leading economic index and coincident index. Also, foreign bond and stocks investments output. A lot of Tier 1 events for the Aussie and the Kiwi this week. Starting from tomorrow, we will see the commodities index from New Zealand, along with trade balance for Australia, including imports and exports, of course, interest rates and rate statement from the Royal Bank of Australia by the start of the Asian session. And then in the end of the same day, the Royal Bank of New Zealand will also print out its labor market indexes, along with the employment and unemployment outlook. On Thursday, in the beginning of the Asian session, the Royal Bank of Australia will also show its unemployment rate, along with employment indicators, part and full-time. On Friday, the monetary policy statement will also be published from the Royal Bank of Australia. Then on Saturday, the National Bureau of Statistics for China will show the import and export outputs and the trade balance for the year. Commodities. Gold traded within 40 cents of a 4-year low after the Bank of Japan boosted stimulus and Federal Reserve ended asset purchases, highlighting divergent central bank policies and hurting bullion demand as the dollar climbed. Silver retreated as well to the lowest level since 2010. Gold capped the first back-to-back monthly decline of 2014 last week after dropping to $1.161 per troy ounce, the lowest price since July 2010, while the Fed is now waiting the timing of interest rate increases. Other central banks are taking steps to boost their economies, spurring the dollar spot index to a 4-year high. Societe Generale and Goldman Sachs Group Incorporated are among the banks expecting further losses for the gold. WTI, West Texas Intermediate, fell for third day, the longest losing streak in more than 2 weeks, as official gauge from China showed factory output slowed and the world's second largest oil consumer. Brent slid in London, futures dropped as much as 0.6% in New York. China's Purchasing Managers Index was at 50.8 for October. Government data showed on November 1st, during the weekend, trailing the median estimate of 51.2 and below September's reading of 51.1. Saudi Arabia is set to announce crude export prices for next month after charging the least in almost 6 years for some November shipments to Asia. That is pretty much all from me for today, covering what happened last week and what is due for this week. Thank you very much for your attention. Trade successfully. Cheers and bye-bye.